Morning all, how are we all doing? Well, I'm very yellow today. Morning. My light seems to be very yellow for some reason. Or is it just my eyeballs? I've got a stinking cold this morning, by the way. I've just woken up with a cold this morning. I don't know why. Obviously, yesterday afternoon I was fine. This morning I have a cold. Anyway, hopefully it's not COVID. Morning in, Harold, Baggy, Michael, Ladder, Mac, Faginia, JC, how we doing? Daniel, Matt, great Phil, Buster, how we doing? From California, I love that. I wish I was there. I need some sun at the moment. Morning, Gregors, Monkey Man, Amy, Christian, how you doing? Excuse me. I've got a frog in my throat this morning as well. Right. So let's have a look at the news today. 7 minutes to the open. Overnight, there was nothing much to report. We had the CPI for Japan. But not an awful lot of reaction, particularly to that. If you look at the, ADRs this morning, flat, nothing exciting happened overnight. More importantly, no news from Japan on any intervention. So they are radio silence overnight, which is unusual. I wasn't expecting that. I was expecting some comments this morning as to what happened yesterday with that spike on the yen. Nothing. So very tricky situation there, because obviously we're over that 150 threshold on the US dollar yen, and they haven't said anything. So no news really overnight. We had earnings overnight. Intel was a beat. Ford was a drop. So possible downside in the DAX today, because Ford obviously is motor industry and DAX is made up a lot of motor industry. We've got Porsche, Volkswagen, Mercedes, lots of motor industry in the DAX. So we might get some downside on the DAX today because Ford missed their targets. Amazon up. So it's again a little bit of a mixed bag with the overnight earnings. I've got that open, one sec. So today is obviously 27th. So we've had Amazon, Ford and Intel are the big three overnights. We've got Aon, Chevron, Exxon. So it's all oil and gas this morning, pre-market. So slightly less earnings today than normal. So hopefully we'll still get some volatility, but we'll see. So other than that, not a lot overnight. Very, very quiet. Today's news is basically PCE this afternoon at 1:30, and then 3 o'clock we got Michigan. So again, it's a little bit of a near news day today. So we'll see what happens. There was no news overnight from the Middle East, so there's nothing changing with Israel. They've been continuously bombing Gaza, but they are still not going in on the ground. So nothing particularly has changed there. Oil's reaction was a big negative day again yesterday, but it recovered towards the end of the day, and this morning so far we're rallying. So potentially today it looks like we might be putting in the second leg of a reversal. Looking to come back up to that high. So that's the low, high. We're looking for a higher low, which we've got. So we're looking for a push back up into the highs there. So we'll see what happens with oil today. But yeah, it's just there's no news catalyst at all today. So it's going to be one of those quiet days, I think. Morning, James. Morning, AZ. Happy Friday. I just feel deflated. It's deflated Friday today. Morning, Kennelly. So I just feel like I feel like a man with a cold. Right. So yesterday, good day on the indices again. Yesterday, 4% banked. Yeah, everything was just pretty good yesterday. There's a few people got very, very, very different results yesterday with the indices, and it is very easy to get very different results because it just comes down to when you exit your positions. But we had obviously the break was short yesterday. So regardless of whether you got out sort of there, you got out there, or you got out anywhere, you had that massive pullback. And this is the whole point of the hedging strategy. You will always, very rarely, you won't get some kind of pullback. You won't always get one, but most of the time the market will pull back on the day's move as whoever is in the direction, profit takes that move. So regardless of which instrument you were in yesterday, you had a lovely pullback towards the end of the day if you held on for it. And this is the whole kind of training thing with the stock index hedge strategy, is trying to train yourself to be patient with it. Because when you get into that trade, you want it sorted, but you've just got to wait. So I had my other account yesterday did 2.6%. So exactly the same strategy. Yeah. But yesterday I did 2.6% over there and I did 4.03% here. Same strategy, same instruments, different result. Because I exited at a different spot. And it's that much difference. If you just enter there, exit there, or exit there, you're going to get a different result, obviously. But it's just waiting for the market just to come back into positive territory. So good day yesterday. Hedged a lot. We had DAX was a good win. We had two hedges. One I got out of at break even, the S&P yesterday. So that one was, I should have taken it off down there. I was looking for a bounce at this level. It bounced a bit higher than I was expecting. So got out of break even on it. You know, some people held this one, got out down there, exited there. You know, totally different result. But at the end of the day, as long as this thing goes up and down during the day, you're going to win. So just patience with it, really. DAX today, we've got a gap up situation. We haven't completed yesterday's gap either. So today's quite a tricky one. Very easy targets today. When we break out the range, if it goes long, we'll be looking for a bounce up here. If it goes short, we'll be looking for a bounce down there. And then obviously at yesterday's low. So very easy targets today. That, depending on what the range is, may not actually be a 2R. Where are we? 167. That's going to be too tight. So 94. I might just get into a trade on this. We got 7 seconds to the open. We'll see. That's probably going to be the range traded today. 187, too tight. So your 2R basically on that range is going to be up there. If it goes long and to the downside, that's going to be a 2R to the downside. So if you're taking the pre-market, good luck. I'm not taking it today because it's a little too tight. We'll see where we go. I'll take the 5-minute opening range break if the candle's not too big. So ADRs, nothing overnight. Dead, flat, rubbish. Morning, Ismet. Morning, Peter. So there's nothing to look at from an overnight perspective. RSI's totally flat, totally dead, which is great because I've got a cold and I feel ill. So the less I can say this morning, the better. So there's nothing to report, basically. US dollar CAD is very extended to the upside on the 4-hour. That's just coming out of extension now. So we had a nice, it was a little bit of a gap there. We had a big rally on this, so we're looking for a pullback on that rally back into either this high or potentially this high. So just got to watch this area if you're shorting this one. It is an uptrend at the moment. Why have I got some ridiculous moving average? This was something I was talking about, wasn't it? Is that the one? I think that's the 150 moving average, isn't it? I forgot to take off my chart. Yeah, that's the 50. We were talking about moving averages yesterday. That. So we've had a reversal on the hourly. Obviously, you would have had your 5-minute and your 15-minute reversals this morning. So if you do want to take that one short, just it's not going to get a lot of distance. Break to the downs. DAX is in hovering around. But there's not a lot of distance down into that support. So if we're going to continue this market structure, it's quite tight market structure on this. Potentially, you're only looking to get back down to there before a new leg up. But there's no bias on this. So it could go long, could go short. Oil, if it rallies, is going to help the Canadian dollar, which is going to bring the US dollar CAD down. So We will see. Outro. Mine's only taken a short. Really? What's that? Have a look in your log. Look in the experts and look in the journal. See if there's any clues in there. Don't know why that would be. Morning XRUpdate.news. How we doing? So just waiting for the 5-minute candle on the DAX. That was it basically this morning. There's nothing. So if you've got any FX pairs you want to look at, let me know. But there's literally nothing to talk about this morning. RSIs are flat. ADRs are flat. A bank's load of stuff. I'm sitting in a load of drawdown. It's the usual stuff, really, isn't it? I'll go through my positions as well, actually, this morning. Wow. Big drops on the US indices this morning. So the DAX is obviously sitting inside the pre-market range at the moment, but the NASDAQ is falling out of bed, as is the rest of the indices. The S&P, the Dow, all coming down very hard this morning. Small gap fill on the pre-market, but that's done now. Yeah, US indices selling off hard this morning, which is interesting because we're not getting that on the DAX. 1 minute to go. So the 5-minute initial cash balance is 286. So I shall be getting on the 5-minute opening range break today. See where we go. CAD Swiss. We'll have a look at CAD Swiss. I'm in CAD Swiss. Yeah, so pretty much the story of the news going nowhere. So 1, 2, 3, 4, 5, 6 days sideways. So basically with the Canadian dollar, obviously we've got weakness on oil. The Swiss franc, we've had all the strength coming into the safe haven run. But at the moment, with the Swiss franc, we are undecided as to whether we need to pull that money out of the Swissy because we don't know what's going on in Israel, and we still don't know what's going on in Israel. So the Swiss franc is going to be very much controlled by what's going on with the situation in Gaza. Okay, 5-minute opening range is in on the DAX. So yes, sideways. I'm long 4 on this, 5 actually, on the drop, looking for a pullback. But at the moment, not going anywhere. So this is a really good level down here. So we've got a nice area to the downside here. So we are basically holding this monthly low. So this is the low of last month, and we're basically just holding that low at the moment. If it does break down, we've got a double bottom on the previous month's low, which is about 125 ADR from where we are today. There's no real news catalyst today to drive this, so it would just be normal price action. So if we do get a drop, I'd expect some kind of bounce there. I'm looking basically for a push up into here. That's the ultimate target, back up into that propulsion gap. But this propulsion really here is kind of where I will be targeting. The problem with this one is, as I said before, the spacing between some of these trades, because of the drops we've had against the Swiss franc, have made this average a long way away. So it's very difficult. That level there is where I'd expect to get up to potentially, but we've got this area here, which is also potentially going to be resistive. So that's kind of a break even, if you like, exit. So that's depending on what the rest of the portfolio is, whether it's the end of the month, whatever. If we do get up to there, I might take this off and just go, that didn't work. But I'll see when we get there. Short on the DAX. So that's the 5-minute opening range. Broken short. 2R is pretty much the low from yesterday's close. And obviously yesterday's low is 3R to the downside. So looking for the gap fill. And that could be anywhere in here, really. Sort of yesterday's low. Don't know. We will see. Long 2, don't keep up with the oil. Yeah, oil's just oil's confused at the moment. Whole market's confused at the moment. Very slow open today. There's not a lot of volume in here today. So the pre-market obviously is not gone anywhere. Little push down, tried to push up, no direction. We've just tried to go short. Doesn't seem to be enough sellers to go short either. So very slow price action today. You can see the candles just like, there's not a lot of volume coming in. US indices are rejecting the lows at the moment. Gap fill's done on the Dow. See where we go. It's going to be a slow one today, I think. Not an awful lot of movement, but we'll see. Come back to that in a minute. Right, so on the positions, so 20% bank this month, 27th, 28th, 29th. How many days in September, October? Thursday, September. So basically it's the end of the month. Got a couple of days next week, but pretty much the end of the month. So it's going to look like something about a 20% month. I've got a lot I can bank in here. I've got sort of 2% on the 2.5% on the table that I can put down here. But I'm just holding on to stuff at the moment because nothing's really moving that I've got on. So we'll go through the positions that are on at the moment. CAD Swiss, obviously, we've already covered. That is just completely stuck sideways all week. I've just been sitting there all week waiting for it to do something. It's not doing anything. So that's stuck in 2.3% drawdown at the moment. Aussie dollar Swiss is coming back up to break even. So this was an initial RSI extension. Can't see that behind my head. Down there. So that was the initial RSI extension. Sorry, no, that wasn't. That was the initial entry there. And then basically we were looking for the next leg up after the pullback. And all we got was 5 days of sideways, very much like the CAD Swiss. We just sat sideways and then it decided to collapse further, obviously, with the money coming into the Swiss franc. So, excuse me. Been scaling into this one, looking for a pullback, basically back up into this accumulation. So we broke down, pulled back, broke down, pulled back. Now we've put in a higher low. Yeah, so potentially we're now looking for a new high above that high and then continuation back up into this area here. So there's two main issues here. That high, obviously, from this week, and then we've got the high from last week, which is going to be resistive. So I've got a TP set there on the lowest position at the moment. And then when we get there, that will hit TP. And then depending on the price action when we get there, we're either going to get a rejection or we're just going to slam through it. If we slam through it, we know we're coming up into this accumulation. So the rest of the targets are up there at the moment. But depending on how the portfolio is looking when I get there, I might just take the whole thing off. Depends. We'll see what happens when we get there. But we've got to get there first. So obviously that higher low market structure, we would expect to put in a new high, and that will be the new high. So that's Aussie Swiss. Aussie New Zealand. Got 4 shorts on this at the moment. I had a break-even exit on this yesterday. I didn't take it because we had a nice pullback, but this was obviously the area that was logical to pull back into and form support, because this was the previous resistance, and obviously resistance turns into support. So we are pushing back off of there. So it's whether or not this reversal alert is going to hold and we're going to get a really elongated kind of M pattern reversal. So today we're looking for some downside on this. DAX is dropping on its way to the gap fill. This is the origin of that really weird move. This price action is just odd. It's not normal price action. It's just like a very weird kind of move. It's weird. It's just not like, there's no structure to it, is it? It's just a weird archy thing and then it goes sideways. So really no idea what the Aussie's doing. It should really be strong based off of the news. So this week we've obviously had the CPI figures for the Australian dollar, and they're all positive. The quarterly, the yearly, the trimmed, everything is positive, which indicates that they would need to put their interest rates up. So this is either a blip in CPI drop or CPI is stagnating. If it's stagnating, they'll need to put interest rates up. If it's a blip, they won't. So we've not really had an awful lot of reaction to the Aussie news. It's been a bit up and down. So very difficult to pick a direction on where this one's going next. We've got this monthly high, which we've tapped into and bounced off. So basically looking for that to hold, really, and hopefully we get a downward move. That's the ultimate target. It's a bit ambitious. Highly unlikely I will hold it down to there. But if we can get down to that propulsion gap, what I'm looking for is basically a big ADR day to take me back into profit, and then I can sit on it and wait and see what happens the following day. So at the moment, not really going anywhere, though, this week. So that's, where are we? Wednesday, Tuesday, Monday. So basically this week is an up week. We started there. We're finishing up there. So it's bullish week, but not really gone anywhere. CAD Swiss, we've already covered. Euro New Zealand, very much the same as the Aussie New Zealand. Price action wise, not really any direction. Looking for a push back into half of that move. So this entire, what's this, 2 weeks, 2.5 weeks, nothing but bulls all the way. So looking for a pullback on this 50% retracement back into that propulsion gap. Average is around about ADR, which is spot on. So yeah, just waiting for a pullback on it. It looks like it's stalling out. We've got an M pattern reversal potentially going in. We need some more downside in this. We need some more power in the New Zealand dollar. Euro wasn't helped at all yesterday. Lagarde basically kept the rates the same. She didn't come out with anything bullish at all in the statement. Nothing bearish either. So just literally business as usual. They're expecting inflation to stagnate for longer. Same as everybody. Every bank has come out and said it's stubborn. It's going to take another 6 months. So definitely the end of next year is when we'll start to reduce rates. That's what they always say. And then they go 6 months in, actually, we'll drop it now. So no bullish, no bearish stance on euro at all. Same with the New Zealand dollar. So again, we're just stuck in this at the moment, waiting to see what happens. Pound US dollar, just got single on that one at the moment. That was the first entry yesterday. So H1 RSI extension, 5-minute reversal alert. We've had the hourly, which is just stagnating at the moment today. I've got a very conservative target on this at the moment because I'm just wary if it all kicks off, and it is going to kick off at some point, isn't it? In the Middle East, we're going to get a rally in the US. So I'm keeping a very conservative target on this at the moment, just to get out with like 0.25%, and be done with it for when that US dollar rally happens, which it should do. But we don't know. It seems to be, it's like a lot of talk and no action with Israel at the moment. And I can understand why, because they're surrounded by other countries which want to invade them. So they really need to be careful with what they do and when they do it. And it's obviously going to drag the US and the UK and NATO potentially into the entire conflict as well. So we will potentially get another safe haven run, Swiss franc, gold, US dollar, yen, not so much the yen now, but and oil when that happens. But we don't know whether they've done that already and we've had enough safe haven running and we're not going to do any more. So I'm just being a bit cautious with US at the minute because it could power up at any time. DAX is pulling back. Bit of a weird move this morning on the DAX. It's not really a propulsion gap, that, but that's the gap fill proper. Hopefully this is just a pullback and the sellers are going to stomp on that and drop it. But a bit of a weird, slow movement this morning, and that's a big bull candle considering we haven't really gone anywhere yet. So sideways today, I reckon. We'll see. So that's pound US dollar. Just got the one on that at the moment. From a support perspective, obviously that's the entry. We've got that weekly low from 3 weeks ago down there, which is ADR today. So if it drops down to ADR, we're going to find some limit order triggers down there and support at that area. I won't get a second on it because it'll be too close. But yeah, it's not going anywhere as we can see. So no issue with it getting down to there at all. It is Friday as well. So safe haven runs, as we know, and we've experienced for the last couple of weeks, happen on a Friday. So basically they put the money in the safe haven over the weekend because obviously they can't do anything with it over the weekend. So we might get a run today on the Swissy and the US. New Zealand dollar CAD, got loads of New Zealand on. So New Zealand dollar CAD in a long, we've been stagnating now for pretty much week and a half, 2 weeks, just sideways in a range. We're up at the top of that range. I had an exit on this yesterday at a break even. Obviously, you don't want to take a break even, I want to take a profit. You can see my target is up there at that previous weekly high. So we are finding limit order triggers at this high, which is this previous low here. So hopefully this is just a pullback into propulsion, and then we're going to get that leg up. So we did put in a higher low, but we didn't manage to get a higher high. So it's a contraction we're in at the moment. So looking for it to contract and then hopefully break up back up into this area. The downside to this is obviously if that does kick off that ground invasion, oil is going to power up, the Canadian dollar is going to power up, which will bring this back down into this range below again. So we'll see. But on that one, New Zealand dollar Swiss, Swissy obviously is the ultimate safe haven run. So it's a case of just waiting for them to undo that move. They will undo this move. At least half of it will come out, because half of this may be speculative. Half of it is safe haven. If half of it is safe haven, they will pull that half out. You'll get a retracement on it. So it's just a case of when are they going to retrace it? They may well add into it. That's the downside, the danger, but we'll see. ADR on it is all I need to get out. And I'm looking for that propulsion gap. So quite conservative before that accumulation, just in case they are going to continue down. So that would be a 38 retracement. I'll put the fib on, but pretty sure that'll be a 38 retracement. Just shy. I've got a cold. You got to give me a little bit of leeway. I'm not quite accurate with my fibs today. So yeah, there you go. Just looking for pullback. And New Zealand dollar, US dollar, again, same reasoning on this one. Cautious because of US dollar strength. I'm just looking for the range high, which is the previous low, which is that propulsion gap. Good chance it's going to push up, and there's a good chance that we'll get a nice big retracement on that on some US dollar weakness at some point. But at the minute, it's just holding. DAX is breaking down again, 1R so far. And our friend, the US dollar yen. So yesterday we had something. Total radio silence from the Japanese. I'm very surprised that there wasn't any mention of it. Quite often when we get this type of movement, literally within an hour, you've got Suzuki or Ueda or someone coming out saying, wasn't us, but we are closely monitoring the Forex markets. We had radio silence yesterday, so we had this massive 175 ADR intervention. Well, I say massive, it's not really massive, is it? But we had a big shock to the market. Nothing. Nobody said anything about it. So I'm keeping my eyes peeled for some kind of news out of Japan today. We've got Muller speaking at the moment, so we might get some euro. Oh, blimey. DAX is just rallying. All the stock markets are just rallying at the moment. We might get some movement out of the euro. So yeah, we had another shot yesterday into the US dollar yen. It's so far today not really gone any higher. We had a little bit of a pullback yesterday. So as you can see, what happened the previous day was we got above that 150 level quite considerably and quite quickly as well. So this was the Japanese pulling some assets and liquidating some yen, but it held. So again, it's another shot which hasn't worked. We keep getting them, but they're not sticking at the moment. So it's basically just a desperate attempt to rally the market on the yen, but it's not happening. So we'll see what happens today. It's unlikely, I think, today we'll get any big natural moves, but we could get an intervention move. Any intervention is only ever going to be down against the yen. Yeah, so it's always going to be bullish yen. So you're not going to get intervention that is negative yen. They're not going to suddenly pull a load of yen out and spend it on assets somewhere. It's not going to happen. So it's either going to naturally push down where the market starts to buy the yen because they're getting threatened all the time, or we're going to get the intervention move. But it's taking forever. Literally 3 weeks since the previous shot. So nothing's happening, but we'll see. I've got another short on it that I took on Wednesday. Just waiting basically for that move to come in, but nothing's happening. And the only other thing I've got on is oil, which we're waiting for next leg up. I thought that was news coming in, but it's my friend Wayne's birthday. Every time I get a notification on my dashboard, it's only ever either financial juice or somebody's birthday. There you go. Happy birthday, Wayne. Tony, do you know if there's a reason why the Dow Jones margin is twice that of the NASDAQ and the DAX on IC markets? No, I don't. But Matt's just answered your question. It's because the value of the Dow is twice the NAS and the DAX. Uh, 32.8 No, it's not. Margin isn't to do with the value. Margin requirements are just put in place by brokers. You can always see the margin requirement if you look at the instrument and go into the specification. You can see all the margin requirements in there. So margin percentage 1%. If you look at something like the pound odd, margin percentage 100%. Seem right, does it? Why does it be 1% on an index? I've never really looked into it, to be honest. It's one of those things that you just kind of accept. It costs more to trade indices than it does FX. It's probably to do with volatility, I guess. Obviously, the indices are a hell of a lot more volatile than FX. So it's probably just to do with that. But I don't actually know the answer to that question. It's never bothered me. I don't get bothered by things I have no control over, basically. So commissions, spreads, swaps, margin requirements, I can't do anything about it. It's just what it is. So I'm interested in trading it, not moaning about, I'm not saying you're moaning, but there's no point in moaning about or getting involved in whys and whats of costs. It just costs what it costs. Cost of doing business. But margin requirements are more tricky. So my Prime account over here that I'm running, which is trading 2% per pair, it's basically when you get hedged on it and you exit a hedge, that margin requirement gets quite close when you're trading three instruments at the same time. So you've just got to be a little bit careful with margin, because the downside to margin, obviously, is when you get a margin call, they shut positions. And it's entirely down to them what they shut as well. So quite often, and it varies with broker, on Axie, if I got a margin call on Axie, if I was trading a small account with large lot sizing on Axie, if I got a margin call, they would shut every position. With Robo Forex, what they do if you get a margin call is they shut the highest drawdown positions until you're back into margin requirement. You imagine what that will do to an EA's logic. If it shuts one trade and it should only be doing something when it shuts two trades, it screws everything up. So you just got to be a bit careful, which is why, if you watched the live room yesterday, I started a brand new account yesterday afternoon, which is a copy trade account, excuse me, with Robo. And I wanted to watch it yesterday because I was trading all three indices for the US. And I wanted to see what the margin requirement was. And the margin went down to 300% from 900%. But when I got out of one position, the margin requirement dropped down to 150%. So if it had exited two strong pushes, if I got hedged on two instruments and two of them hit a 5R target, the drawdown on those two instruments would have taken it very close to 100% margin call. I get margin called at 50%. So you just got to be a little careful, which is why I'm always like, just get as much leverage as you can. Basically, I can only get 1 to 300 on a prime with Robo Forex. So, and for indices, it's enough to run a 6% risk on 3 indices in total. Just about. But on FX, I wouldn't even touch the sides on FX. If I was trading 3 instruments with 6% risk on FX, would be anywhere near margin at all. Just one of those things. It's higher margin requirement. Nothing you can do. DAX is still breaking down. So this propulsion gap is holding. So this is obviously the initial cash balance. This is the initial propulsion move. And the sellers are adding in. So we know this is a speculative move because the sellers are adding into their positions. So got a good chance of getting target today. Good wicks to the upside. So we know the sellers are in control. All good. DAX bounced at my pre-market low to the pip. Yeah. Well, depends what your pre-market low is. If you've got pre-market data, you'll have different pre-market low, won't you? I think Axie's got all pre-market. Can't remember. My head is a little bit clouded today. Okay, so that's held. So we're looking for a break of that low. Yeah, so this is full pre-market on DAX. So that is the pre-market low on Axie. And their candle opens at 3 o'clock in the morning. So, this is the thing with brokers. You're going to get different information from different brokers. You can see the difference, obviously. We opened at 147.47 on Robo Forex, which is totally different. Look, 147.47 is down there. See what I mean about price is irrelevant. What something is trading at. Price action is the same on all instruments, on all brokers, but the price is totally different. Their CFD is not the cash, and they give you all the pre-market information. So you see something totally different. You've got to trade your own charts. But yeah, that pre-market low, perfect bounce basically. But when you look at this here, you wouldn't see that. So, it all depends on what you look at, doesn't it? It's not bouncing because of that level there, because this isn't real data. This is broker data. The market was shut. The stock index opens at 7 a.m. in Frankfurt. It's shut. Literally, this is not happening. It's just what your broker is providing you to trade based on speculative movement. Not real. Which is why everybody that contacts me in Telegram and says, do your indicators, the EAs, work on, what's that broker called? I've forgotten the name of them. My head's not with it this morning. Begins with a D. You can trade the VIX and everything on it. Deriv.com. Yeah. Deriv.com are the closest thing you can get to binary options, because 90% of the stuff you can trade on Deriv.com is synthetic, created by the brokers to allow you to trade whatever the hell you want. So who provides that price? The broker. If the broker provides the price, what do you think the chances are of you winning any money? Yes, everything works on Deriv.com, but you won't. Stop it. Stop trading rubbish. Like crypto. Hence, cue the argument. Possibly the S&P margin is half of what the DAX is. Morning, Edward. Don't know. Don't need to answer this one. Someone needs to Google it. Find out. See what the margin is on the Russell. I think you'll find it's probably the same on all indices. I don't think you'll see a difference on individual indexes. I think you'll find the indexes have a margin. FX has a margin. Commodities will have a different margin. I think it's more sector-based rather than individual instrument-based. Might be wrong. Like I said, I'd look into it. Do you use different broker accounts for different strategies? No. Oh yeah, different accounts. Yes, different accounts in the same broker. Yeah. You need to separate your strategies out, because you've got to be able to see how the strategies are performing. If you stick everything in one broker and trade everything in one broker, first of all, you're going to get diversification on your instruments that you're trading. So therefore, you'll get different trades on the same instrument, possibly in different directions, different levels. So you're just over leveraging yourself or overexposing yourself. And secondly, you need to be able to see how well something's performing. If something is sitting over here performing at X% and something is sitting here and performing at Y%, you can say X is better than Y. If everything's in one account, you can say, I've just done this. You have no idea why you've done this. So you've got to be able to break things down and analyze it. And the best way is to have different accounts for different strategies. So this account has got different funds in it to the position trading account. And I'm not trading any other position trading. Position trading is position trading. How you do it is entirely up to you. You are getting a position on an instrument. So whether you're using H4M5, H4M15, H1M5, ADR reversals, whatever you want to use one. Don't use all, because it's just position trading. It's not, you could have an H4 account running and an H1 account running, an ADR running, but if you look at all three of those accounts side by side, you'll find you're in very, very similar trades on all of them. So there's no point, because you're just triple leveraging, triple exposing yourself. This is really stuck today. Not going anywhere. But we are bearish, so hopefully. Tony, the Russell is lower than the S&P. Okay, prove me wrong. There are different margin requirements on different instruments. I don't have that on mine. I don't have any different margins on this. They're all the same. They're all 1%. But then again, I haven't got the Russell. So the Russell is 2,000 stocks. So it's a much more dense instrument, much slower moving. So maybe there is a different margin requirement on that, because it is very slow compared to the other indices. It's more like an FX pair, really. As Matt's just said, I'll just shut up and let you guys talk, because you know what you're talking about. I'd much rather do that today, to be honest. We're not going anywhere, are we? Stuck. Just going to move my target up ever so slightly on this, just in case we get some buyers out of yesterday's close. That's more likely where we're going to head today, I think, probably. Basically, yesterday's low is a pretty obvious limit order target today. So we bought it, we bought it, we bought it, we bought it, we bought it. So, you know, the market doesn't want to go below that level at the moment, does it? So downside target, that is probably the most logical. But obviously we bounced from there, we bounced from there, we bounced from there, we bounced from there. It's not an area, it's not a level, it's a zone, it's an area. So makes sense to stick target up there above that area. If we are going to break down, we've no idea whether it's going to bounce from there, there, or there. So if you pick the closest area, you know you're probably more likely to hit it. But at the moment, we are 25 minutes absolutely sideways, no direction whatsoever. So at the minute, it's not looking like it wants to break, but we'll see. So if it hedges, the gap fill target is there. The speed it's moving today, if it doesn't go short and we do get hedged on this today, I think the chances of actually getting anywhere are very, very slim because there's no volume in the market. So that 2-hour target gap fill to the upside might actually, if you look at the price action from yesterday, that might actually not be a bad place to get out of everything and start to try and hedge it back down again, but or do an aggressive exit down. But the high from yesterday is above ADR. Judging by the speed of this today, chances of getting an ADR hit today are probably slim to none, aren't they? So we'll see where it goes, but at the minute we're not going anywhere. So I will just remain in it. I'll post in Telegram what happens, if anything, but there's not a lot else to look at, really, is there? I have too much money for margin requirements. I wish that were true. Your margin requirements are irrelevant. Well, the money you've got in your account is irrelevant to margin requirement because margin requirement is a percentage. So whether you're trading £100 or £100 million, 1% is 1%. So you'll get margin called on a million if you're risking 1%, in the same way as you get margin called on a million if you're risking 100. If you're trading £100, won't you? So obviously money makes money. So the more you have, the easier it is. But you'll still get a margin call. I don't run my accounts with anywhere near my value, my wealth. I don't put my money in my broker accounts. I keep my money in my bank and I put some in my broker account and I trade with that money. And if I need to top it up, I will top it up. But I don't put everything in there. Because if you put everything in there, you're just risking everything. There's no point in risking everything. At the end of the day, you are basically placing all of your funds in a segregated account in a company overseas. If you think about it, it's not safe, is it? If you're doing it in your own country with 30-to-1 leverage, no problem at all. But 30-to-1 leverage, you can't even trade indices with it. Well, you can't. You can trade indices with it. You can trade an index with it, but you can't trade multiple. 30-to-1 leverage, I couldn't get 1% risk trades on the US indices in the afternoon. Not enough. So that's a good reason for segregating your money. Run 3 brokerage accounts. In fact, best thing, run 4 accounts in your broker. 1 for the DAX, 1 for the S&P, 1 for the NASDAQ, 1 for the DAX. Now, then you'll be able to see exactly how each one is performing as well, won't you? Koch may once again provide the answer. It may do, Chris. I can't even remember what it is. Change of character. There you go. Change of character may provide the answer. So if I disappear off now and come back with a moustache on, or maybe a gold chain around my neck. There you go. I've changed my character. That's about as useful as change of character is in trading. Do all propulsion gaps on the different timeframes have equal weighting, or do gaps on the timeframes above have more influence? Personally, it's less reliable on higher timeframes. So, not because they don't get filled. As you can see, this is a 4-hour time frame. Yeah, still filled the gaps. Yeah, but they take an awful lot longer to fill, and because time makes it, because they take a lot longer to get filled, there's a lot more opportunity for something fundamental to shift the bias on an instrument. So if you look at a Forex pair, for example, like pound US dollar, by the time that is formed and we get all the way up to here, we've had 2 CPI figures, 2 interest rate figures, 2 GDPs, 2 unemployments, in that period of time. These fundamentals will decide whether this is going to go up or down. So when you have a large move, that large move may be for 2, 3 weeks, 4 weeks, or whatever. Then the fundamentals may carry that instrument further, which means you will never get back there. And like there's one here, right? There's a massive propulsion gap there, yeah? It tested it. It's never come back to it. And it's not even drawn on the chart because I don't have my settings back far enough, but I can change that. And you'll see that one back down there. Yeah, so look, but these are from September last year. Yeah, fundamentals are different. Fundamentals have changed and shifted it away. Yeah, so I personally concentrate only on the hourly time frame. And I only look at the last 1,500 candles. Yeah, so I'm really interested in what I can see on my chart when it's zoomed out. That's really all I'm interested in. Yeah, because if it's getting back past here, things are just different now. It's changed. The world's changed. The fundamentals have changed. We've shifted. Stuff's not right. So what we're looking for is where are they going within the current frame of movement that we are currently trading, the conditions now. So this is these purple lines you can see, these are monthlies. Yep, so that's this last month, that's the month before. Anything older than a couple of months, the fundamentals are different. Yeah, interest rates are different. Inflation's different. Wars have broken out which weren't there. Oil has different output restrictions from OPEC than it did back then. So, everything is different. So I don't really look at anything bigger than an hourly propulsion gap. They're reliable, but equally, they will get left behind as well. If the propulsion gap formed there is part of a news event that changes the fundamentals, it's not coming back there. But it will come back to ones which have formed more recently than that, and they form the targets, which is why when you're position trading, DAX has just pushed back up inside the opening range. Which is why when you're position trading, you'll see me adjusting targets. So my target right now is there. Yeah. If this pushes down through here and then slams down into there and does that, there will be a propulsion gap formed there. I will be averaging into that move. My average, let's say, for example, is there. My new target will be that propulsion gap. So I'm using hourly propulsion gaps as targets because we know they get filled. We know that the price is pushing back to them. Yeah. Pushed into it, pushed into it, pushed into it. Filled it. That's where I got out. Why did I get out there? Because that was a propulsion gap and that was a target that was in profit. So I took it. It happened to hit that one. And that's where they resold from. They sold there. They added to their sell positions. Yeah. So when we get back to this propulsion gap, there's a chance they'll add to these sells. If that isn't where they're going to sell, they could add from any of those sells. If structure is going to remain short, we're looking for where they are going to add to the shorts. And that's what propulsion gaps are. Bank orders, which is where they will add to those positions because they can, because they have an unlimited amount of money. So hourlies, I think, are the better ones to look at. Anything on the lower time frames, the lower you go on a time frame, the more you are trading algorithmic chop, and the more it becomes pretty random as to whether or not it's hit it because of a reason or it's hit it just because the thing's going up and down. So the hourly, I think, is really the sweet spot, just from my experience, as to an indication of that is definitely a bank order. On a lower time frame, a 5-minute candle that goes like that could just be a large amount of orders coming in, but on a lower time frame, it can do that. Yeah. On a higher time frame, all of that movement there will be one big candle, which is a reliable yes, they are adding constant sells in on the lower time frame, and you see it clearly on the hourly. Just it's clearer. The higher up you go in time frames, the market's fractal. So everything repeats itself on every single time frame. All you're doing is you're looking at the same price action, just you're condensing it into wider candlesticks. So the higher you go, the more reliable everything is, which is why all strategies, all professional traders will never look at anything below an hourly chart. Very few will look at anything below a 4-hourly chart, because all it is just algorithmic chop. Doesn't make any sense. It's just thousands and thousands of this $7 to $10 trillion a day market being pumped in. On an hourly and a 4-hourly chart, you're seeing intent, which is why you'll find most traders who are successful will never look at anything lower than an hourly chart, because the lower time frames are chop. The exception is obviously with some strategies like the opening range breakout, where you have to look at the lower time frame because you are trading the chop. We are actively making money out of the algorithmic chop. The purpose of this strategy is we know when the chop is going to hit. That's why it works, because we know the timing. Higher time frames, you haven't got a clue when the timing is. When is the pound US dollar going to move next? No idea. Probably this afternoon at 1:30. Why? Because there's a news event. Other than that, you have no idea when the US dollar is next going to make its move, because it's down to the banks to move it. So if you're looking at 5-minute charts, you're just seeing what they're doing for their customers, executing commercial transactions on behalf of Microsoft. Irrelevant. It has got nothing to do with the intent of where they want to take that market. It's just crap. You're looking at crap. But everybody wants to trade the crap because you can get in there with 1%, and by the time it's down to there, add 2% onto your account. But if you do, it's pure fluke, because all you're doing is you're trading nonsense. It's chop. There's no structure to this. Every reversal alert you see on the 5-minute chart is potentially a failed reversal, because the fact that they have for the last 25 minutes or 30 minutes sold is just because they've had to execute £25 million worth of transactions on behalf of Microsoft, who are shifting funds from the UK to the US or vice versa. Yeah, when they've finished executing that order, they'll have to execute the opposite order for Tesla, and it will be 60 million, and it will go up. But on an hourly time frame, what you will see is a candlestick which will have all of that encompassed in it, but a clear indication of where the bias is, which makes more sense. So hence that being the time frame that makes more sense and works more often, because it's filtering out the crap that you don't, that has no meaning. Yeah. You know, it's like, you think about it when you get you get paid, if you have like 3-5 grand or whatever paid into your bank account, you have one big expense go out for your mortgage. You might have one big expense go out for your car payment. So 50% of your money in your account disappears on those things. The rest of it is microtransactions at coffee shops, pubs, bars, restaurants, and it's all tiny little crap. Yeah. But the big thing is the mortgage and the car payment. That is saying I've got a load of expenditure. This is saying we have got a load of sells. Much more important. Yeah. So, but equally, you know, on the 5-minute time frame, look, accumulation, break, add. Yeah, it does work. But equally, I can show you 1,000 times where it just goes straight through every single one of them. Not a care in the world, because they were asked to execute 25 million pounds into US dollars on behalf of Microsoft. Nothing's going to stop that transaction going through. But overall, in the last 24 hours, they've executed more buys. So if you go out onto the hourly time frame, you'll see an awful lot clearer that the bias is long. Make sense? But if you go too high, it's just, you know, that is a massive accumulation break. They added clearly into that. Then they did another one, but we haven't touched this. But we're not likely to come back to it now. It's from July. Yeah, well, it's a different place. The Israel thing hadn't kicked off in July. Are we ever going to get back there? No idea. It's irrelevant now. It's gone. Forget it. But that's just from experience. You know, it's a sweet spot I've decided on, but use your own, you know, test it. Go look, just look at propulsion gaps on different time frames. You know, you look at the daily, absolutely spot on. Absolutely spot on. Absolutely spot on. Yeah. But it took 4 months to get spot on. Is that really why that happened, or is that just coincidental? And it's a 61.8 or it's a 71.9 retracement on that move. Yeah. This one here. That, oh, incoming mail. That's a 70. That's telling me that the clocks are changing. Probably brokers will bombard you now with information about clocks changing. I get about 1,000 emails every time the clocks change from all the brokers I've ever had in my life telling me that the clocks are changing. Cheers, brokers. Yeah, but that's 71.9 retracement. So did that bounce out of there because of the propulsion gap, or did it bounce out of there because it's 71.9 retracement? Or did it bounce out of there because the moon was half instead of full? Did it bounce out of there because it's a Wednesday and not a Thursday? Don't care. What I care about is it does move from propulsion to propulsion. The whys, the wheres, the whats, doesn't matter, does it? We know propulsion gaps get filled. Whatever theory you have about why, fine. But we've all got the same opinion. They get filled. Just do it. Use them. Best thing since sliced bread. And all it is literally, it's nothing clever. It's a visual representation of a large movement in price. It's an impulse candle. An impulse candle is caused by the banks and institutions dumping a large order. So all this blue line is showing you in the past something big happened there. What it was, I don't know. It could have been a news event. It could have been somebody sneezing in Barclays and going, oh, crap, I just jumped 25 million on that. Oops. Okay, we'll pull it back out next week. Okay. Doesn't matter what the reason is. We just know that they get filled. So if we knew everything about everything, we would all be billionaires, wouldn't we? Just can't know those things. I really didn't want to do this today, the DAX. I would much rather you just hit target so I can go and lie down and have a sleep. But it's not going to happen, is it? They're going to hedge me and I'm going to have to deal with it all day. So we're back inside the opening range. So it's not lost. That's the high of the session. That's the low of the session. Hopefully this is a 50% pullback on the session and we're going to go from there. One or the other. Nah. How exactly does margin requirement work? Don't I only get margin called once my open drawdown exceeds my equity? Margin requirement is based on your leverage. So every instrument has a margin. And a margin is just an amount of your money they allocate to it. So if you take one trade and it reduces your margin from 900% down to 700%. If that goes into drawdown, the more it goes into drawdown, the more that margin percentage drops. So it's the percentage of available margin that is shown in your MT4. So 934% is the margin requirement, margin level. So you will either get margin called at 100% or more commonly nowadays with brokers 50%. So when that gets to 50%, they will margin call you, which basically means we're just going to shut the lot out. Yeah. Which is why brokers love margin calls, because margin calls, if you are on their A book or B book, depending which one it is they use and call, the one they take the opposite sides of your trades, every time they margin call you, they are basically taking all of your money and putting it into their bank account. Which is why it's important to be aware of margin. Because those trades, you may have available equity in your account, and those trades, just as you get margin called, 90% of the time is exactly when they go the opposite direction. Okay, stupid. You know, your pen game is strong. My pen game? What? What's my pen game? You mean my pen? I've no idea what you mean, Dances. Sorry. Australia PMI released, is it? Is it? We had Australian PPI this morning. Not news, though. It's not anything important. PMI for Australia? It's not. PPI. Yeah. Producer Price Index. It's not. It does. They don't produce anything. This is why with news, sometimes, like PPI for the US is massively important. Not important for Australia because there's no production. So if you don't produce a lot, whether or not your figures of producer have gone up or down is a lot less relevant, isn't it? So it's just not relevant. This is why we class news with different levels of importance, because the Tokyo CPI is orange. Why? Because they don't change their interest rates. So whether inflation is going up or down has no bearing on the currency strength because they don't change their interest rates. They've been negative 0.1 for 6 years in Japan. So we class that as orange because it doesn't matter if it comes out at 27%. They're still not going to change their interest rates. So therefore, it's not news. Whereas the CPI in any other country is huge news because every other country decides to change their interest rate when inflation goes up or down. They have a different stance, as in they hold all their money overseas in everybody else's currency because theirs is crap, which is quite clever when everybody else's currencies are stable and doing what they want. But when it's not clever, which is why the why the yen is such a loony currency, because it is totally controlled by all other currencies. All of the Japanese wealth is stored in the US dollar, the pound, the euro, gold, and oil, and bonds everywhere. So they have no control over whether their currency goes up or down. Everybody else is in control of it, which is why we have interventions, because they have control in the fact that they can sell everything and put it all back in the yen. Then the yen just makes everything collapse through the floor. So we don't care about the inflation figure over there because it has no influence on monetary policy. It does slightly. If you look at the yen, I mean, that's a plus 2%, 0.2% increase. What's it done? Nothing. Because it's just not important. Not important to the markets. In the same way as the Australian PMI. Oh, Austria. Sorry, I can't read this morning. I'm not well. Austrian PMI has been released. What's that got to do with the price of bread and butter? That doesn't even feature. We don't care about Austria. The only thing you need to care about with Euro is Germany and France. They make up way more than 50% of all Euro transaction. So if it's happening in Germany or France, it's important. If it's happening in any other European country, it's irrelevant. There's no economy anywhere else. It's all French and German. All car manufacturing, basically. If you need a car, 90% of the time, it's coming from Europe. Dances, don't be dull. The one you use to scratch on your desktop using Epic Pen. I still don't know what you're talking about. My pen game is strong. What do you mean by strong? Don't make me work today. I can't. My brain isn't in gear enough to comprehend clever comments. As you can tell by my voice, I'm fading fast. Austrian PMI is key. Forget about non-farm payrolls. Absolutely. Yeah. Ireland. Yeah. Ireland's very important. Highly, do you use Payback FX for your accounts? No. For rebates? No. ECB sees inflation at 2.7% for 2024. Unchanged from the last survey. Okay, so that's not good, is it? So target is 2%. What they're saying is we aren't going to hit target next year. It's going to be 2025. And we're only just at some point in 2025 going to get there. So this is not good Eurozone. It's basically we're stagnating and we can't get on top of it, is what they're saying there. I'm such a boomer. I am a boomer. Payback FX basically is a rebate service, basically, where they will give you back some money for everything you spend. If you are worried about getting a kickback on your Forex account, I would suggest you're not doing this as a job. And then it's just such a tiny, insignificant amount of money. It's just not worth it. Payback FX is used in the same way as gambling. When you put money into a gambling website and they give you 100 free spins, or you deposit $100, they'll give you $100. They know they're going to get all that money. Payback FX is the same thing. For every trade you take, they'll give you a rebate because they know they're going to get it all. So it's pointless. If you go to my FX book, isn't it? I've got an ad blocker on, so you won't see it. But they have an ad come up for it as well on here. Let's turn my ad blocker off. Oh, they've got an advert for City Index now. But normally that comes up with an advert for some kind of rebate service. But you made $400 this month. What did you trade? $400 is not an insignificant amount of money, but you've got to put a lot of money to get that, surely, haven't you? I'll look into it. I used to use it when I first started trading. US indices has just got a kick for some reason. The big order just coming on the US indices. Sector purchase of some description, not really impacting the DAX, though. You looked into it, and I started when I first started trading with, who's my first broker? IC Markets. No, IG. When I first started trading with IG, they had a rebate service, and I used it. And I was trading with like about £1,000 or something ridiculous, something small, and I was getting rebates, of like £5 or £6 a month. Thinking about it, that was actually 5 or 6%, wasn't it? So right now it's worth quite a lot of money. I'll have a look. Yeah, it might actually be worth doing on indices, I suppose. I'll have a look into it again. It's all money, isn't it, at the end of the day? Anybody that wants to give me money for no reason, more than happy. I'll take it. But I assume, yeah, I mean, I don't even know how the business model works with that rebate thing. I presume it's basically in the same way as prop works. So everybody that fails, they use that money to give it to people that actually make money, I presume. I don't know. I've never actually looked into the logic of it. It's one of those gimmicks, it's like the rebate services, like I say, with gambling websites. If you want to use a gambling website, go to the one that's going to give you the biggest amount of money. So if you deposit $100 and they give you $200 free, go and use that one. You will have to do 1,500 spins of the roulette wheel, in which case you will lose it all. But they give it to you, but they know that it's not real money. It's just like, send me a screenshot. Oh, that's on IC Markets. Yeah, all right. So if you've got a trade with IC Markets, to use that. There is a rebate company. It's not coming up on my FX book, but there is a rebate company where you can use any broker. And basically, you just have to supply the investor passwords, and they rebate you a percentage of what you spend. And they've got agreements with all the main brokers. But IC Markets, obviously, it looks like they've got their own. But yeah, I don't know. Worth looking into. Yeah, or you can use any broker, can you? All right, okay. Send me a link to the actual website. I'll have a look at it. It might be worth doing. Now, it's just one of those things I never looked at again, because it wasn't even going to pay for a cup of coffee type thing a month when I first started trading and looking into it. But now it would pay for probably a car payment. So it's probably worth having a look at, isn't it? DAX is going up again. This looks like it's going to be a hedge loss today, because it's taking pretty much an hour even just to get hedged. So the chances of actually getting a move strong enough and far enough to actually make any money today is probably not going to happen. So if this does drop and doesn't put in a new high, you know what I'm going to do? I'm going to increase my hedge risk above that high of free market, because it makes absolutely no sense to have a pending breakout order there when the high of the session is there. Might as well just take that extra bit of risk, which is probably going to cost me $100, just for the potential that they might not break the highs. But at the moment, it's just not going anywhere, is it? So I don't know. We've got a gap fill to do to the downside. We've got a gap fill to do to the upside, and there's no volume. So it's just a non-starter today, isn't it? These are the days where you don't get paid. Hopefully we'll get paid this afternoon, but we'll see. But might make some money on the DAX. We've got Euro Yen coming down. Yeah, US dollar Yen's coming down as well. I'm just keeping this block on here because that is my forecast of the intervention move, which is 10 ADR. So it's actually a bit high. I'm going to go 8 ADR, which is 450. Yeah. When the intervention move comes in, I reckon that's what we'll see. We will be down there somewhere. Today, tomorrow, no idea. Well, it won't be tomorrow because the market's shut, but today or Monday, maybe. Yeah, my trading volume will recover well, yeah. Never looked into it. Like I say, rebates have always been a gimmick to me, so just not been interested in them. We've got some decent movement going on at the moment. Aussie dollar Swiss back in profit. So this is a critical point. This is the high from Wednesday we're up at now. Again, look at that propulsion gap, yeah? Look at that propulsion gap. Don't know why, just know it does. Don't need to worry about why, just know it does. So I'm targeting that high there, basically, which is 125 ADR today. But there's a good chance we're going to get a double top here and pull back, because we haven't done a profit take move on that yet. So we'll probably want to pull back and do a retracement leg if we are going to go higher. So we have put in a higher low. We're looking for a higher high, but we're obviously going to find limit orders there because that's where they sold it on Wednesday. So we're probably going to run into a bit of trouble here. But if it does pop through there and they're out of that move, i.e. that's the profit take on that leg, then we will just slam through it. And if we slam through it, that's where we're going. So I'm going to watch what happens when we get to 125 ADR. If I can get sort of 0.75% or something out of it, I'll put it down there. Pound US dollar's going nowhere. Everything else is just sitting around, isn't it? So it's a mare day today. Hopefully we just get some of this Swiss franc unraveled, but we'll see. DAX is just stuck now in the opening range, so I'm just going to leave it there. Hopefully that comes down. I'll post in Telegram what happens all come this afternoon, 2:20 for the New York session, assuming I'm alive. And we'll see what happens. Payback FX. There we go. Trade, get paid, repeat. XM, AXI, IC, FP, AVA, FX Pro, and FBS. I don't trade with any of them. It's not going to help me, is it? AXI I trade with. Oh, hang on. Oh, right. Okay. All right. Robo Forex. There we go. Up to 0.6 pip rebate. Here we go. Right. Okay. Prime. 15% of brokers' commissions. Yeah. I know. I see what they're doing. So basically, it's an affiliate, isn't it, really? So basically, they are assuming you're going to go and set up a brokerage with them. It is owned by my Forex book. Not my Forex book, by my FX book. Yeah. That's where the adverts always used to come up on my FX book for this. So basically, I get 15% of commission back. Yeah. I suppose it is worth it. I'll set it up and see what happens. It's almost worth having a ECN account rather than a Prime, isn't it? But then you got bigger spreads. See, they're using the spread to pay you, aren't they? That's why they're giving you more there, because the spread is wider on an ECN than a Prime. It's all just ways of making money, isn't it? They just want you to press the button, basically, don't they? Which is fair enough. That's their job. Right. What's a rebate? Money. Just basically money they give you back. So every time you take a trade, you get charged a commission and a spread, obviously. Or depending on the account, it's either just spread or it's a spread and a commission, depending on the type of account you've got. And all they do is you can get a rebate on every trade that you take. So they give you back, as in that case, 15% of your broker commission. So in my case, because I use a Prime account, which gives you a tighter spread, I get charged a commission. So they make money out of commission, not spread. So I get a bit of that commission back. It's money for nothing, basically. But you've got to make it worthwhile. You've got to put some volume in, basically. You know, you get a rebate of what you spend, and if you don't spend much, you don't get much rebate. So I've just never bothered to look at it again. I looked at it years and years and years ago and just never looked at it again. But then years and years and years ago, I was trading $5,000 or so. I'm now trading a lot more. So it's a bit different now. It's probably going to be worth my while to do. In fact, it might even pay for my car, which should be good. Right, I'm going to leave it there today. IC markets seem to be best. Yeah, it's just they're an affiliate, aren't they? Basically, so you click that link, you set up an account, they get an affiliate kickback on every trade, and they give you back some of that affiliate kickback. I think that's probably how it's working. They will have an agreement with the broker as well, because I won't be an affiliate of theirs because I've got an account with Robo Forex already, so they're not going to get any commission out of me. So. See. Right. I will be back this afternoon at 2:20. Fingers crossed, as long as I don't feel like crap. And DAX at the moment is not going anywhere, so nothing much to report today, really. Haven't banked anything today yet. There is stuff that potentially looks like it is going to bank today if it carries on. There you go. Aussie Swiss has broken out the highs. Going to need to run up to over ADR to get out of it, though. But I might do a partial back excuse me, might do a partial bank on this because I can stick 2% in the bank with those 2 trades alone on this Swissy. And it would actually be nice to get out of some Swiss franc exposure. So I might do some partials today, but we'll see. I'll see how the price action goes today. But yeah, back this afternoon at 2:20. We'll look at the FX pairs again, and we will see how indices do this afternoon. We've just literally come off of the initial cash balance high to the pip. So we might just do this. If we get down to there, I might just consider taking it. I think it was about $1,000. I might just take it off and be done. If it goes down again, who knows? News-wise, be aware this afternoon, 1:30, we've got PCE. So we'll get some kick off the US on that potentially, but probably not much movement. And then we've got Michigan at 3. Market does move on Michigan. Not sure why, but it just does pay attention to it, or rather they use it. I think the reason University of Michigan actually moves the market is not because of the University of Michigan, it's because it's 3 o'clock on a Friday afternoon. So the markets are wanting to dump orders, get flat, take profit. Just they need liquidity to get orders placed. And I think that's really why this moves it. So we do quite often get some movement off the Michigan numbers. So we could have some ADRs this afternoon on the US and other things, but we'll see. So I'll be back at 2:20. We'll trade the US indices, have a look at what's going on in FX, see if the DAX actually bothered to work. It doesn't look like it is today. Yeah, go from there. Hopefully, I will go and take a load of lemon sip and hopefully I feel better. All right, so have a good day. I will see you this afternoon. If not, I'll be back Monday morning, 7:50, same time, for the Frankfurt session. Have a good one.